So let us continue with the topic of residential status, where in the last lecture we have discussed the concept of tax incidence, that is scope of total income as per section 5. What broadly we have covered in that? There are three categories of residential status of different persons: ROR, RNOR, NR, as far as individual and HUF are concerned. Now, for the remaining categories of persons, we have only two types of residential status, either R or NR. Now, when we have learned to compute how to determine the residential status, our next job or next stair is to check which incomes are taxable for that particular person whose residential status we have determined. So, income can be of any head: salary, house property, PGBP, capital gain, other sources. That is another question. Before that, we must know that whether that income is taxable or not in the hands of that person whose residential status we have determined. So what we have learned in the last lecture was, if income is received in India, it does not matter from where or where it has arose or arisen or accrued. It does not matter. If income is received in India, Government of India says your residential status does not matter, that income will be taxable in India. Second point was, if income is accrued in India, then also government says it does not matter where it is received, it will be taxable in India. It does not matter what is your residential status, every person has to pay tax in India on this income. So if income is received in India, taxable here. Income accrued in India, taxable here. Then what is left now? What is left now? Only one. When income is received as well as accrued outside India, only this income is left now. Income received in India, taxable. It does not matter what is your residential status. Income accrued in India, taxable. It does not matter what is your residential status. But income received in India, received and accrued, both the things, if outside India, then Government of India says, or Act says, any income which is received and accrued outside India is taxable for ROR. No conditions involved. Any income which is received and accrued outside India, not taxable for NR, non-resident, no conditions involved. So even in this case, where income is accrued as well as received outside India, ROR and NR cases are crystal clear. Income received and accrued outside India is taxable for ROR. Income received and accrued outside India is not taxable for NR. Now, what is the question about RNOR then? Or what are the provisions about RNOR then? Any income which is received and accrued outside India is also not taxable, for RNOR, except in one situation. Except in one situation, it will become taxable for RNOR, otherwise it will remain not taxable for RNOR also. What is that first or one situation where income accrued and received outside India will become taxable for even RNOR? That situation is if this income which is received and accrued outside India is from a business or profession, as well as if this business is 100% controlled from India, or this profession is 100% set up in India. If this condition, or if this is the case, then the income which is received and accrued outside India will become taxable for even RNOR. Other than this case, even in the hands of RNOR, income received and accrued outside India is not taxable. I gave you the example. For example, I am earning any income under the head house property. I am RNOR and I am earning any income under the head house property. Now this is not, house property is not PGBP head. So I will not check where the business is controlled, etc. That is not at all a business income. If this house property income is accrued as well as received outside India, and if I am RNOR, it will not be taxable in my hands, because only in one case income received and accrued outside India is taxable in the hands of RNOR, and that case is what? if this income which is received and accrued as well as accrued outside India is from a business oblique profession, and this business is 100% controlled in India, or if it is the profession, then it should be 100% set up in India. Please raise your hand if you remember this. Hurry up. Those who have not understood, they can ask me without any hesitation. So I expect that most of you have understood this point. Now, another provision which I will discuss now. It is clear that income received in India is taxable. It is clear that income accrued in India is taxable. But income accrued as well as received outside India is not taxable for non-resident, as well as in almost many cases, or in many cases, income received and accrued outside India is not taxable even for resident, but not ordinarily resident. Only in one case this income received as well as accrued outside India is taxable for RNO, which I have just discussed, that is from business or profession. Now, because of this provision, many incomes will go untaxed, or would have gone untaxed, not will, would have gone untaxed. If you are a non-resident, as far as if you are ROR, there is no problem, because for ROR every income is taxable in India. But for NOR and NR, incomes which are received and accrued outside India, for NR this income is always untaxed, no taxable, as far as current provisions are concerned, which I have discussed with you. Income received as well as accrued outside India is also not taxable for RNOR except in business or profession. So in these two situations, when you are RNOR and when you are NR, and income is received as well as accrued outside India, most of the incomes are untaxed. If the provisions which I have discussed with you, if you remember those provisions, then most of the incomes will go untaxed. Now, to avoid this situation where most of the incomes of this non-resident or RNOR will go untaxed, we have two new provisions in the Income Tax Act. And those provisions are what? Income deemed. Some incomes will be assumed to be received in India, or some incomes will be assumed to be accrued in India. Though actually these might be accrued outside India as well as received outside India. In reality, some incomes might be actually accrued outside India or actually received outside India, but Income Tax Act mentions those provisions categorically or specifically, that some of the incomes will be assumed to be the incomes which are received in India or which are accrued in India. The moment some of the incomes are assumed to be the incomes which are received or accrued in India, these become taxable even for NR as well as RNOR. If it is clear, please raise your hand. Now I think you know the concept why we are discussing deemed, because we want those incomes which are actually accrued as well as received outside India as deemed to be received or accrued in India. The moment we call those incomes as deemed to be received or accrued in India, these become taxable for everyone, ROR, RNOR and NR. And in this way, government can increase the tax base. Okay, now let me share the screen. So the topic of tax incidence is being continued, and let me now again simplify ROR, RNOR and NR. First point, income accrued in India. That means actually accrued in India. Actual, in real life it is accrued, taxable for everyone. Does not matter who you are. Income received in India, actually received in India. It does not matter where it is accrued, it is taxable for everyone. And now if in this accrued I add one more word, deemed to be, sentence, deemed to be accrued in India, though it might not actually accrued in India, but if it is deemed to be accrued in India, still it is taxable for everyone. Similarly, any income might not be actually received in India, but these will be deemed. These deemed concepts are only to increase the incomes which will become taxable for even non-resident and RNOR. Otherwise, for deemed to be received or accrued has no effect on ROR, because ROR pays the income tax even on those incomes which are accrued as well as received outside India. So these deemed provisions are not for the purpose of ROR. These are broadly for the purpose of these two people, NR and RNOR. Deemed to be received. These are taxable for everyone, does not matter who you are. Yes, but accrued as well as which are received outside India, accrued as well as income which is received outside India, these are taxable only for ROR, not taxable for NR, not taxable even for RNOR, except in one case, and this one case is I have discussed in detail already, business or profession and controlling or setup in India. That's it. I hope the point is clear. Now the discussion will be on what are those cases where these are deemed to be accrued or deemed to be received. As far as deemed to be received is concerned, we have section 7, which I will not discuss with you. I will first discuss with you the cases where incomes are deemed to be accrued in India. It is section 9. So my next discussion will be on section 9 with you. I'm going to discuss now those cases where incomes are deemed to be accrued in India. If the income which is deemed to be accrued in India, it becomes taxable whether you are ROR or NOR and NR. In reality, any income might be actually earned outside India, but if those are deemed to be accrued in India, then deemed to be accrued in India, this concept will be applied first and it will be made taxable in India irrespective of your residential status. Let me first discuss it. Then I will discuss with you a numerical, and then you will be able to understand this concept fully. It is very easy, but little bit concentration is required. Anyhow, now I am starting with what? Next section, section 9 of the income tax. It will tell me the incomes which are deemed to accrue or arise in India. If my case is covered in this category, incomes which are deemed to accrue or arise in India, you will never argue that why these are deemed to accrue or arise in India. If these are actually accrued outside India, why these will be deemed to accrue or arise? There is no answer to this question because section 9 says it, that there may be some incomes which are actually accrued outside India, but section 9 says that you will not say that these are actually accrued outside India. We will assume those incomes to be accrued in India and you have to pay tax here. So first point, simple, income from a business connection in India, or I am removing the word income from a business connection, income from capital assets which are situated in India, or not capital assets, income from assets which are situated in India. If there is any income you are earning from any asset which is in India, you have to assume that the income is accrued in India and you have to pay the tax. income payable by Government of India, income payable by the Government of India to any citizen, to any Indian citizen outside India. If any Indian citizen is in outside India but salary is payable by Indian government, we have to assume that the income is accrued in India. So Indian citizen will not argue that I am non-resident, why you are taxing this salary. Government of India says no, you are covered under section 9 where your income will be deemed to be accrued in India and you have to pay the tax even if you are non-resident. Dividend paid by Indian companies outside India. I will show you the act now. Dividend paid by Indian companies outside India. If any Indian company pays any dividend, even if outside India, if any Indian company pays any dividend, even if outside India, it will be assumed that this dividend income is the income which is accrued in India, and every recipient of this dividend, even if non-resident, has to pay tax on this dividend income in India. So this is the benefit of this section 9, where income might be actually accrued outside India, income might be actually received outside India, still any non-resident or any resident but not ordinarily resident will not argue on that point. If their case will get covered in section 9, they have to pay tax even on these actually accrued as well as actually received incomes which are outside India. But if those incomes are covered under section 9, they have to pay tax here, because section 9 is supreme than their argument that it is actually received outside India, actually earned outside India. This argument will not be sustainable if my case is covered in section 9. So these are some of the examples. I will show you the bare act also. Income taxable under the head salary. That means practically salary income. Income taxable under the head salary. If the salary is earned in India, if it is earned in India. What do you mean by if it is earned in India? I can say that if services are rendered in India. If my services to my employer are rendered in India, I will say that the salary is earned in India. So this salary, even if I have gone to any foreign country and at that time this amount is given to me, government says no, it doesn't matter. This income is assumed to be the income which is accrued in India, and you pay the tax even if your residential status is non-resident or not ordinarily resident. In second point also you make one change. When I am saying that income payable by the Government of India to any citizen, it is basically income payable, it is salary payable. It is also related to salary. When Government of India gives any salary, so rather than income payable, to be precise, you should use the word salary. Now these four are those common points: income from assets situated in India, salary payable by the Government of India to any Indian citizen outside India, dividend paid by Indian companies outside India, income taxable under the head salary. So second and fourth point are basically salary income if it is earned in India, if services are rendered in India. Now next 3 points are little bit technical but very interesting. So what is fourth point? Interest income. Little bit technical but interesting. Interest income. Now what do I mean by interest income? Suppose I am Mr. X. I have given loan to Mr. Y and the loan amount is 5 lakh, on which 10% is the interest rate. So can you tell me how much I am earning every year? How much I am earning every year? 50,000. So Who is the borrower? Who is the payer of interest? Can you tell me who is the payer of interest?
Mr. Y.
Yes. Income earner is Mr. X and payer of expense or expense incurring person is Mr. Y. Now, the point technical here is that who is earning the income? Mr. X. So whether Mr. X is ROR, RNOR, NNR, it will not matter if the case is covered in section 9. If the case is covered in section 9. So this residential status is of Mr. X. I'm not concerned about the residential status of Y because Y is not the person who is earning. In fact, he is incurring the expenditure. So I want to check who is Mr. X. Mr. X can be ROR, RNOR and NR. Now in this question, not in this question, in this provision of interest, the point is we also need to check that where the borrower has utilized this amount. That is why it has become technical. There can be a simple question which you can ask that why we are concerned with Mr. Y. He can utilize the amount anywhere, but X says no. X says whether this interest income is covered under section 9 or not, it does not depend on any simple point. It says it depends on the purpose for which borrower has utilized this amount which he has borrowed. So in this case of interest, I need to think from two persons' point of view, not only from Mr. X, but even from Mr. Y's point of view. Like, so there are three different categories in this interest income. There are three different categories. First, if the borrower is whom? Government of India, or not Government of India, even state government. If the borrower is Government of India, then government can use this amount for any purpose. This interest income is treated as income deemed to accrue or arise in India, and it will become taxable whether Mr. X is ROR, RNOR and NR. Point clear or not? Mr. X has given a loan of 5 lakh to Government of India. If Mr. X has given a loan of 5 lakh to Government of India, then it is very simple. We will not check what government is doing with this amount. If government is simply giving interest of 50,000, X has to include this 50,000 as his income. It does not matter whether X is ROR, RNOR and NR. Please raise your hand if this point is clear. Please raise your hand if this point is clear, that when interest income is earned from the government भी तो loan लेती है. It doesn't mean that the government doesn't take the loan. Government also take loan. Government also need borrowing expenditures. So if government has borrowed some amount from me, then whatever interest income I will get, it will be treated as the income which is deemed to accrue or arise in India, and it will be taxable in my hands whether I am ROR, RNOR or NR. Please raise your hand if this point of government is clear. Next point. Now, for example, government has not borrowed. I can give my amount to anyone at some interest. Now, suppose the person who has borrowed is a resident. Now, do remember what I am saying. Second point. The person who has borrowed, so these are borrowers. Who is the borrower? In first case, it was government. Now, the person who has borrowed is resident. That means now Mr. Y is a resident. I am assuming that borrower is not government. Now, borrower is Mr. Y and his residential status is resident. Mr. Y is a borrower. Now you can see what new thing has happened. To see whether this interest income is deemed to accrue or rise in India, I am concerned about residential status of borrower also. If this borrower is a resident and if the purpose for which this amount is used by this Mr. Y who is a resident, if this purpose is outside India, for example, borrower is a resident Mr. Y and he has used the amount. For what purpose this borrowed amount is utilized? The borrowed amount is utilized, or it can be utilized for any purpose. It can be utilized for any purpose by me as a resident. I am now Mr. Y. Utilized for any purpose except only one thing should not be covered, except for the purpose of outside India. Simple point is this. Technical I will show you in bare act, except for the purpose outside India. Now what is technicality involved here is that Mr. X is an income earner. He has given 5 lakh to Mr. Y. Y is a borrower, so Y will give 50,000 to Mr. X. Now the question arises, is this 50,000 taxable in the hands of Mr. X or not? Assuming Mr. X can be ROR, RNOR and NR. Answer is what? If this amount is borrowed by a resident person, in this case, yes, because Mr. Y is resident. Mr. Y can be ROR, RNOR, does not matter, but Mr. Y is resident. This is my assumption. Then Mr. Y can utilize this amount anywhere for any purpose, does not matter. This income will be assumed to be the income which is accrued in India. But in one case, it will not be deemed to be accrued or arise in India if Mr. Y has utilized this amount for doing some business or for doing any other thing outside India. Any interest income which is earned by any assessee, in my case Mr. X, if the borrower from whom this interest income has been earned, if that borrower is a resident person, then this interest income is always treated as the income which is deemed to accrue or arise in India, except in one case it will not be treated as income which is deemed to accrue or arise in India, and that one case is what? If this borrower has utilized this borrowed amount for doing anything or for fulfilling any purpose outside India, in that case only it will not be deemed to accrue or arise in India. Otherwise, if borrower of your amount is a resident, it is always treated as the income which is deemed to accrue or arise in India, except in one case it will not be treated as income which is deemed to accrue or arise in India, and that one case is what? If this borrower has utilized my amount for doing or fulfilling any purpose or for any purpose outside India. This might be a little bit technical, so I will not take any doubt till I discuss with you numerical. You simply listen to me. Third, now this borrower is a non-resident. So why it is technical? Because now I am concerned with the residential status of borrower also. Now suppose Mr. Y has become non-resident, or Mr. Y is now non-resident. For example, Mr. Y is non-resident. For example, Mr. Y is non-resident. Then, so Mr. X I have given 5 lakh rupees to Mr. Y who was non-resident at 10% interest. Y has given me 50,000. Now the question which arises in front of me is that whether 50,000 is taxable if I am ROR, whether 50,000 is taxable if I am RNOR, whether 50,000 is taxable if I am non-resident. So my answer is that, now I will tell you my answer. Since it is an interest income, I need to refer section 9. When I referred section 9, I found that the borrower is a non-resident. So what is the answer now, which I will tell you now? This interest income, if amount has been received by the borrower who is a non-resident, is never treated as income deemed to accrue or arise in India, is never treated as income which is deemed to accrue or arise in India, except in one case it will be treated. What is that one case? Can you tell me logically what will be that one case where it will be treated as income deemed to accrue or arise in India? If this amount is utilized for any purpose. After this, what you should write logically?
In India.
In India. This is a technical provision. Now, just visualize in your mind. I, Mr. X, have given 5 lakh rupees to Government of India, and Government of India is giving me every year 50,000 rupees. This 50,000 is treated as income deemed to accrue or arise in India, and I will include this as my income whether I am ROR, RNOR or NR. Second point. I have given 5 lakh as Mr. X, I have given 5 lakh to Mr. Y. Y is giving every year to me 50,000 rupees. The question arises, what about the taxability of this 50,000? Since it is a separate provision of interest, I need to apply section 9. Section 9 says that if your borrower is resident, then whatever interest income you are earning, we will assume that income to be accrued or arise in India. So this interest income earned from a resident is always deemed to accrue or arise in India, but in one case it is not treated as income deemed to accrue or arise in India. What is that one case? If this borrower resident has utilized this amount which he has borrowed for any purpose outside India, only in that case it is not treated as deemed to accrue or arise. Otherwise, it is treated as deemed to accrue or arise. Third case. If this Mr. X, who has given 5 lakh to Mr. Y, now if this Mr. Y is non-resident, then also I need to apply section 9 because section 9 talks about interest income, some incomes which are deemed to accrue or arise in India. If this borrower non-resident has utilized my amount for any purpose in India, then only it is treated as income deemed to accrue or arise in India. Otherwise, it is not treated as income deemed to accrue or arise in India. If this non-resident has utilized 5 lakh rupees for doing some project in Russia, then this 50,000 is not treated as income deemed to accrue or arise in India. Then if it is not treated as deemed to accrue or arise in India, then what? Then after what? So then after what will happen, that I am not going to discuss right now with you. For the time being, my purpose is to simply tell you which incomes are deemed to accrue or arise in India, which incomes are not deemed to accrue or arise in India. That's it. What will happen after that? That is another question. That is another stage. Please raise your hand if this point is clear. Still, if you have any problem, you ask me. This is the only technical point in the entire chapter. The purpose is to make sure that every income becomes at least deemed to accrue or arise in India so that everyone pays tax here, even if non-resident. Very good. So most of you have understood, and you will understood more when I will discuss one numerical after some time. Now, another point. Just like interest, we have 2 other provisions also within section 9. So I'm not going to discuss those because only the word will change, concepts will remain same. Like royalty income from royalty. This is interest. 6th point is royalty income. Okay. So when you transfer any patent, any innovation, etc., when you transfer any information, any engineering information, or you transfer any scientific knowledge, any experience, any model, any design, any innovation of yours to any company, then you might get royalty. Like for example, Mr. X has designed a new engine which will save the petrol consumption. For example, Mr. X has designed a new engine to be used in four-wheelers, which will reduce the consumption of petrol. So maybe any company like Honda or Hyundai will buy that engine and will give to Mr. X 300 crore rupees or 400 crore rupees. So that is royalty income. As Mr. X, I have given my innovation to any company, and the company is giving me, for example, 400 rupees. So it becomes what? A royalty income from me. Now, what about the taxability of this? Again, same thing. It depends. This borrower. Now, I will not use the word borrower because this person who is giving me royalty has not borrowed me something. That person has received some right. So I will now say that rather than borrowing word, I will simply say that where this right which I have transferred, or where this information which I have transferred is used or utilized. That's it. That's it. Again, same thing. If this recipient to whom I have given my information or innovation is government of India, state or central, doesn't matter, then this royalty income will be treated as income which is deemed to accrue. So it does not matter who am I. If Mr. X is even if non-resident, that person has to pay the tax. If this information is shared by Mr. X with any resident person, then where this information has been utilized by this resident person does not matter. It is always deemed to accrue or rise, except in one case. What is that one case where it will not be treated as deemed to accrue or rise? Can you tell me what is that one case where utilization is outside India? In that case, it is not treated as deemed to accrue or rise. Otherwise, it will be assumed that it is accrued or rise in India. Similarly, if Mr. X has transferred the innovation to a non-resident person, then it is never treated as deemed to accrue or rise. Only in one case it is treated as deemed to accrue. What is that one case? What is that one case where it is always treated as deemed to accrue rise, where utilization is in India? So everything is same, only the heading has become different. Similarly, last point, fees for technical services. Now these three are technical points: interest, royalty, fee for technical service. Otherwise, section 9 is very easy. Fees for technical services. Fees for technical service. Same thing. What is this fee for technical service? Anyone can give an idea? For example, I'm an engineer having a different qualification, and I have provided some expert service to any company. So they will give me what? Fee for technical service. Because I have given my technical expertise to them. I have made available myself for their technical work, and they are giving me fee for technical service. Same thing will happen here. If Mr. Y is Mr. K is an engineer given any technical service to Government of India, then what will happen? This income, if this technical service, so now I will use what word? This technical service is utilized. That's it. So this conceptual heading have been changed. Otherwise, the things are same. Where technical service is utilized. If I have provided my technical service to Government of India, it does not matter where GOI, Government of India, is utilizing my technical service. Income is always deemed to accrue rise. So Mr. X will pay the tax. Does not matter who is this Mr. X, Mr. K, ROR, RNOR, or NR. Similarly, if the recipient of my technical service is a resident person, always it is treated as income deemed to accrue or rise in India, except in one case. Can you tell me what is that one case? Which case? Except where utilization
services is utilized outside India.
yes, except where utilization of this technical services outside India. In that case, it is not treated as deemed to accrue or arise. So one question must be coming in your mind that if it is not treated as deemed to accrue or arise, then what? So then what? That I am not discussing right now. I will tell you later on that after this what will happen. Till now, my purpose or the discussion is only to tell you the cases where incomes are deemed to accrue or arise in India. That's it. What will happen after this if these are not treated as deemed to accrue or arise? That is separate question altogether. Third, non-resident. Never treated as deemed to accrue or arise, except in one case where it is treated as deemed to accrue or arise. What is that one case? Where utilization of my technical service, utilization of my technical service is within India. That's it. With this, my section 9 is over, where I have told you the cases where incomes are deemed to accrue or arise in India. Now I will discuss with you in numerical. So let us discuss a small numerical. So let us discuss an example. From my book, Concept Building Approach, page number 2.15. So let me show you that example. You take this screenshot and solution we will do. Is the screen visible?
Yes, sir.
Please take this screenshot. Please take this screenshot of this example, and then we will discuss it. Have you taken this screenshot?
Yes, sir.
Okay, now read this case. Read each and every line carefully. Then we will do. This one question will clear your issues which might be there in your mind, might be there. Okay, now let me solve it. Is the screen visible?
Yes, sir.
Okay. Fair presentation, I will show you how you should present. But let me read this question, or you also read. The following details are furnished by Mr. Taylor, a UK citizen. So Mr. Taylor is a foreign citizen. I don't know whether Mr. Taylor is a person of Indian origin or not. I don't know because that information will be required or not. But whenever you read everything, in every word you must be having something in your mind that what can happen. For the assessment year 21-22. So there are 1, 2, 3, 4, 5 incomes given. 4 lakh, 10 lakh, 2 lakh 60, 680, 1 lakh. Last line of the question says, compute the total income of Mr. Taylor. This is what the question says. For the assessment year 21-22, assuming he is resident and ordinarily resident, but not ordinarily resident and non-resident. That's it. It's a simple question. It simply says that computation of total income of Mr. Taylor for the assessment year 2021-22. ROR, RNOR, and NR. Particulars. This is what the way to attempt the numericals. Okay, you must be systematic. Just because you write the answer and expect examiner to give marks, that is not the correct thing. You must know how to write. What is the proper way to behave as an examinee? Income, now first one, income from business carried out in Mumbai, 80% received in USA. Can anyone explain this point to me? Always what I should check, whether it is actually received in India or actually accrued in India, or if not actually, at least check, is it deemed to be accrued in India or deemed to be received in India? If all these four are not happening, then of course the income is income accrued as well as received outside India. Okay, so first of all, check these four things always. Actually accrued in India or not? Actually received in India or not? Deemed to be accrued in India or not? Deemed to be received in India or not? If not, if all these things are not happening, then of course I will say that income is accrued as well as received outside India. So I will apply another provision. This is what income from business carried out in Mumbai. 80% received in USA. So by default, that means 20% where it is received. Can you tell me where 20% is received?
In India.
Of course, in Mumbai. When question says business is carried out in Mumbai and 80% is USA, indirectly question is saying that 20% is in Mumbai, in India. Now, what is this income? It is actually accrued in India because where the business is being carried out, in Mumbai. So I will simply say that it is the income which is accrued in India. That's it. No need to check any other point. If business is being carried out in India, then income is accrued in India. Simple. Actually accrued. You have to check case to case whether it is actually accrued or not. So there is no fixed points to tell you. It comes with your practice. Income is accrued in India because the business is in India. So it is taxable. It does not matter who you are. If you are ROR, still it is taxable. If had you been RNOR, still you would have included 4 lakh as your income, and if NR 4 lakh income. That's it. This is first point. Because business is actually carried out. I'm not concerned that 80% is received in US or not. It's not my job now. When I have come to know of that the point business income is accrued in India, it will make the entire income taxable here. I'm not at all concerned whether it is received or not, or how much it is received or not. If income is accrued in India, taxable. Where it is received is none of the business. Second point, rent from a house property. Rent from a house property. Can you tell me which head income? Which head income is this? Rent from a house property. Is it salary or PGBP or capital gain or other sources or house property? Under which head this rental income is shown? Rental income is shown as income under the head house property always. When we will discuss the chapter house property, then you will learn that rent from a house property is always taxable under the head house property. So it is house property head income. So I am earning rent as Mr. Taylor. I am earning a rent in New Jersey. So where the income is accrued? Can you tell me where the income is accrued?
Sir, in New Jersey.
Where the income is accrued?
In New Jersey.
New Jersey. That means outside India. Collected there. So where income is received?
In New Jersey.
New Jersey. So this is which income which is accrued as well as received outside India. Ignore that comma. After that comma, whatever is written, you ignore it for the time being, but later remitted to India through normal banking. Ignore that point. Suppose you are reading the word sentence, rent from a house property in New Jersey collected there. So it is income which is accrued and received outside India. So one thing is sure, it is neither the income which is actually accrued in India. Is this income actually accrued in India? Answer is no. Is this income actually received in India? Answer is no. This is the income which is accrued as well as received, both the things outside India. But I will not apply this provision. I will not apply this provision because I have two more things to be checked. Can you tell me which two more things to be checked before I go to this point? Can you tell me which two more concepts I will check?
Sir, deemed to be received, deemed to be accrued in India.
Yes. I know that this income is actually received outside India. I know that this income is actually accrued outside India. But still, I have not yet checked whether it is deemed to be received in India or whether it is deemed to be accrued in India. Now, deemed to be received in India provisions I have not told because for your level those provisions will not come. So I will never discuss those. Ignore it. You assume that income is not deemed to be received. For your level, those provisions will not come. But are these or is this income deemed to be accrued in India? So if you remember those points, it is not covered in any of the case. Asset house is not in India. It is not a salary. It is not a dividend. It is not a salary. It is not an interest income. It is not a royalty income. It is not any fee for technical service. So after reading these points, I can say that this income is not deemed to be accrued in India also. Now after this, I can surely say that income is accrued as well as received outside India. Please raise your hand if you have understood the way to see the questions or attempt the question. Just because in second point I got to know that income is received as well as accrued outside India, I haven't proceeded further. I have first made sure that income is not deemed to be received in India. I have made sure income is not deemed to be accrued in India. When I have made sure that income is neither deemed to be received in India nor deemed to be accrued in India, then only I finalize that yes, this income will remain income accrued as well as received outside India. And now I will apply those provisions. So can you tell me which provisions are to be applied when I have finalized that this is the income which is accrued as well as received outside India? Which provisions I will apply? The provisions of income received as well as accrued outside India. So what are the provisions? What are those provisions? Income which is received as well as accrued outside India. What are those provisions? Income received as well as accrued outside India.
Taxable for ROR.
Yes.
No taxable for NR.
Yes.
No taxable for RNOR except one case.
Yes. Which is
If
that
the
one case?
if the income is received from business and profession which is controlled and set up in India.
Don't use the word if income is received from business. Simply say if income is from business, not received. Received word you don't use. If income is from a business or profession. Okay. Point clear?
Yes, sir.
Okay, so received word don't use. Now, anyone can tell me, you mute yourself. Mute yourself. Is this person who is unmuted? Yeah. Now, when I have finalized that the income is not actually received in India, I have finalized that income is not actually accrued in India. I have finalized that income is not deemed to be accrued in India. I have finalized that income is not deemed to be accrued in India. So that means it was sure that income is received as well as accrued outside India. So I'm going to apply those provisions now where income is received as well as accrued outside India. So what are those provisions? Let me show you those provisions. So let me tell you those provisions. So what are those provisions? Okay, so I'm cutting this thing and now I'm saying that the income is received as well as accrued outside India confidently. This is what I will write now. Income accrued as well as received outside India. This income is taxable for ROR. How much is the income? 10 lakh. But I will write here only 7 lakh because when you will cover the chapter house property, then you will find that rental income is always allowed, always taxable, but 30% deduction is always given from rent. We call it as 30% standard deduction. So you are not supposed to learn it right now, but since I am doing the correct thing, so I have to write only 7 lakh. So the time being, you should not be concerned about this, from where this 30% deduction has come. It is given while computing income under the head house property from rent. So for the time being, you simply learn that from every rent, 30% you have to deduct. So that is why I'm writing 7 lakh. This 7 lakh is not taxable because it is income accrued and received outside India. NR are not supposed to pay. Now my question is, will I tax 7 lakh if this person is RNOR or not? That's it. Can anyone tell me the answer? Will I write 7 lakh here or not? Anyone who can tell me this answer?
No, sir.
Why?
Because his not income is not from business and profession, which is
Yes.
carried and set up in India.
No, there is no need to tell me this point which is carried and set up in India. If income is not from business and profession, topic is over. Point clear?
Yes, sir.
जब वो income business or profession की है ही नहीं, then why will I check from where the business is controlled? Yes, you are 100% correct. This income is house property head income, rental income. So it is not from PGBP head. That is why it will again not taxable for R and OR. So this is the relevance of now studying the section 5 scope of total income. Please raise your hand if you have understood this point. Please raise your hand if you have understood this point. Very good. Third point. Now, if you see, third point is what? Dividend received from M Limited and Indian company. Can anyone tell me the answer of this third point? Dividend received from M Limited, an Indian company. Can anyone tell me the answer? Anyone who can tell me the answer? Dividend received from M Limited, an Indian company. This is the dividend received from an Indian company. What is the answer? Where it is actually received? Any answer? Where it is actually received?
No, sir.
I don't know, because it is not mentioned where it is received. Am I right or not? Unmute and reply.
Yes, sir.
sir. You.
Yeah. Now, where it is actually accrued, I should not waste my energy in determining where it is actually accrued. I should not waste my time in determining where it is actually accrued, because I know that in section 9, even if this dividend is payable outside India, still that is treated as income deemed to accrue. Then in this case, I don't know where it is paid. Okay. The question is silent. I don't know where it is paid. It might be paid in India. It might be paid outside India. If it is paid, had it been paid in India, it would have become income simply actually received in India. I would have directly taxed the amount. Point clear or not? Had it been actually paid in India, it would have been directly treated as income actually received in India. It would have been taxable. If you assume that if it is paid outside India, still any dividend paid by Indian companies outside India are deemed to accrue or arise in India, it again becomes taxable. It does not matter who you are, ROR, RNOR or NR. Our purpose is not to exactly check that whether it is actually received, actually accrued, deemed to be received, deemed to be accrued. No, there is no need to check that. The main purpose is to simply make sure that what is the taxability? Is it taxable for ROR, RNOR and NR? Government says you write it under any heading, does not matter. You treat it as income actually received, or you treat it as income deemed to accrue or arise in India. In both the cases, income become taxable for everyone. So under what heading you write it, government says it doesn't matter. If it is taxable for everyone, and if you have taxed it, then the point is over. So in my example, the point was dividend received from an Indian company. It was not mentioned where it is received. So I cannot judge exactly where it is received. But my question to you is what? It does not matter where it is received. If you assume that it is received in India, still it becomes taxable for everyone. If you assume that it is received outside India, still under section 9 it becomes taxable for everyone. So what I will write, I will say that dividend paid by an Indian company is taxable. That's it. It does not matter where it is received. Had it been received in India, it would have been treated as income received in India, and it would have been taxable for everyone, ROR, RNOR or NR. If you assume that it is received outside India, still under section 9, it has become income deemed to accrue or arise in India, it becomes taxable for ROR, RNOR or NR. That's it. So the amount which is taxable is for all 260. 260, even if this Mr. Taylor is non-resident, still 260 is taxable in India. Please raise your hand if this point is conceptually clear. Any slight doubt, you ask me right now. Next point. Can anyone tell me the answer of next point carefully? See from your screenshot. And can anyone tell me the answer of next point? Royalty, no need to be in a hurry. Royalty received in UK from R Limited, an Indian company, for use of trademark for its business operations in India. Take your time and try to tell me the concept applied in case 4 or to be applied in case 4. Anyone who can think and decide what is the exact use of point 4?
Sir, it will be deemed to accrue in India.
Why?
Sir, because R Limited is an Indian company which makes it an Indian resident, and then it is being utilized in India, the trademark. So
Yes, 100% correct. Now, where this income is actually received outside India, am I right? Where the income is actually received
in UK, outside India.
outside India. Now, where it is actually accrued, I should not waste my energy in checking where it is actually accrued. So, I will directly go to section 9 then. And I found that in section 9, this is a royalty income which is received from a resident assessee. Who is this resident assessee? R Limited. Because every Indian company is resident. So, R Limited is a resident. Any royalty received by Mr. Taylor from a resident assessee is always deemed to accrue or arise in India, except in one case where this information or trademark is utilized outside India. But in this case, the trademark is utilized in India. So, this royalty income is deemed to accrue or arise in India. This royalty income is deemed to accrue or arise in India. Because because R Limited has utilized this trademark for doing something in India. So it becomes taxable because of this 680. This is the way to attempt numericals of this. Last, can anyone tell me the answer of fifth point? Think carefully and tell me the answer. Anyone who can tell me the answer of point number 5? I'm taking 2 minutes break. You can also come within 2 to 3 minutes and then we will start. Within 2 to 3 minutes, we will start. Please raise your hand if you are available. Please raise your hand if you are available so that I get an idea whether most of the people are here or not. All those who are available here, please raise your hands. Hurry up, please raise your hands if you are available. Please raise your hands, those who are available. Okay, can anyone tell me the answer of this point? Anyone who can tell me the answer of this point?
Sir, I think it is not assumed as accrued or arise in India, because firstly we have to check that whether it is received in India or not. So that
Actually,
was,
whether it is actually received in India or not. Okay.
yes, sir, actually received or in India or not. So that was not, that is not the case. So
Hmm.
now we don't have to focus on where it was accrued. So
Hmm.
now we will pursue. And as the borrower is non-resident and they utilize the loan amount for purpose in outside India, so the it is not deemed and assumed.
Deemed to accrue or arise in India.
Yes,
So which is this case? In this case, income interest on loan is not received in India. Where it is actually accrued, it is not possible to easily check. So I will skip that and I'll go to section 9 directly. And I found that this interest income is received from a foreign company which is non-resident, because foreign company can also be resident if place of effective management is in India. But question itself tells me that foreign company is a non-resident. So when interest is received from a non-resident assessee, it is never deemed to accrue or rise in India. But in one case, it is treated as income deemed to accrue or rise in India if that amount is utilized in India. But in this case, amount is also utilized outside India. So it is also sure that this income is neither deemed to accrue nor arise in India. Please raise your hand if this point is clear, that this income is neither actually received in India, actually accrued in India or not, we cannot tell with this information. It is neither deemed to accrue or arise in India, and neither it is the income which is deemed to be received in India, because I have told you that for your level we will not discuss the case where income is deemed to be received in India. So we will assume that income is not deemed to be received in India. Now all the four possibilities where it would have been taxed in every case are clear. So it is sure that income is received as well as accrued outside India. Please raise your hand if you got the concept that this fifth point is the income which is received as well as accrued outside India. Please raise your hand if you have understood this point carefully and clearly, that it is the income which is received as well as accrued outside India. Now I will tell you that what now. Earlier I was not telling you this when I was discussing with you section 9, but now I will tell you that once I got to know that this income is neither actually accrued in India, neither nor actually received in India, neither deemed to be received in India, nor deemed to be accrued or rise in India, then what? Now I will give you the answer what. So one thing is sure now, that this is the income which is accrued as well as received outside India. So what is the taxability of that if it is income which is received as well as accrued outside India? So what is the taxability? How will I tax this income now? I will tax this amount for ROR, because for ROR it is sure that this interest income is received as well as accrued outside India? It is sure. So it is taxable for ROR. It is not taxable for NR. And can you tell me the answer for RNOR what I will show? Can you tell me the answer for RNOR what I will show?
Sir, nil.
Nil. Why?
Because it is interest income not from business and profession.
Yes. Now borrower is using this income for business purpose. I'm not concerned about the business of borrower. I'm concerned about the business of income earner. And income earner, Mr. Taylor is earning this interest income under the head income from other sources. So this interest income is not from business and profession. So Mr. Taylor will show here as nil, and this is the answer. The totaling is around 21,40,000,
Excuse me, sir.
13,40,000, and 14 lakh. Not 14.
So that 1 lakh will not come at the end.
Yeah, it is blank. It is not taxable. 14 lakh. Sorry, 13 lakh 40. Yes. Yes. Now you ask me the doubts. You are asking something. Someone was
No,
asking
sir.
something.
Actually, I was telling about only 1 lakh.
Yeah. This is not taxable.
So how do we
Yeah.
figure out that income is actually accrued or not? Is it like specifically mentioned in the problem?
No, it depends on case to case. Like in this case, I cannot figure it out because these were interest income or royalty incomes.
Yes.
Like in first case, it is income from business carried on. I easily found out that income is accrued in India. But there might be some cases where information will be silent.
Okay, sir. All right.
Now, any problem, you please ask me the doubts. If not, please raise your hand if you have understood this technical point. And with this, we have covered almost technical points. Okay, this is the way to present such questions. If you want to take screenshot, you can take it. If you have taken this screenshot, please raise your hands. So that's it for today. And we are ending this session today. So you must revise this concept. And in the next class, we will practice 1 or 2 questions. And after this, we will proceed to the next topic. So today, I would like to give a pause at this point because you need to revise all the topics which I have covered of section 5. Income received in India, accrued in India, deemed to be received in India, deemed to accrue in India, received as well as accrued outside India from a business or profession. Or let me see whether we can attempt any small numerical or not. Please wait and let me see the possibility whether we can attempt a small numerical or not. Not a lengthy one, but a very small numerical I would like to discuss. Let me see if or I will ask you some questions. You simply tell me. This will revise your concept. So rather than practice anything, I will ask you some points. The point for this. Now you tell me if I ask you. Now listen. Interest received from government of India in France. What is the taxability of this treatment? If 5 lakh is the interest amount received from government of India in France, can you tell me the taxability? Interest received from government of India in France. Or let me share that screen so that I can write it. Now, rather than discussing full-fledged questions, I will discuss this with the help of these points. Is the screen visible?
Yes, sir.
You simply tell me the answer, some examples of on tax incidence. So my first example is interest received by Mr. X from government of India, but in France. So I'm receiving it in France. Can you tell me the taxability rupees 5 lakh? What about the taxability if I am ROR or NR or RNOR? What is the taxability? Can anyone tell me?
Sir, it is taxable for all
Why?
because brewery is the government and we are not concerned about where government is using this money.
So I can say that as per section 9, this income is deemed to accrue or arise in India. Because of section 9, it does not matter who this Mr. X is, this income will be taxable in his hands. I hope the point is clear. Any problem you can ask. Okay, now let me ask you a second point. Okay, let us discuss some examples. You take the screenshot of this point also. Let me share one more example from my book, a small example. And then we will only discuss about the taxability. It is example number 13, page number 2.25. Is the screen visible?
Yes, sir.
You take the screenshot of this table. I will, in this question, we have to determine the residential status also, but that I will not discuss. I will discuss only the tax treatment of different incomes. You take the screenshot of this point A, B, C, D, E, F. And if you have taken the screenshot, please raise your hand so that I can proceed. Some figures are there on the next page also. So I will discuss only these points. If you have taken the screenshot, please raise your hand. Hurry up, take the screenshot and raise your hands. Okay. Now you take the screenshot of next page also. These three lines. G, H and I. These 3 points also. And then we will discuss each and every point. Please raise your hand if you have taken the screenshot of these points also. These 3. Okay, now let us start discussing each and every point. We will discuss the tax treatment of each and every point. Okay, so we will check the tax treatment. Assuming that this person is ROR or if RNOR or NR. Okay, first point is interest on American development bonds. 50% of interest is received in India. Anyone who can tell me the answer? They can raise the hand so that I can ask. Those who know the answer of first point, they can raise the hands. Interest on American development bonds, 50% of interest is received in India. Those who know the answer, they can raise the hands of this point. That how do we determine the taxability? Harsh, can you explain? Not there, I think. Prem, can you explain? First
Yes, sir.
point.
So, sir, 50% of interest is transferred, is taxable, sir.
And what about remaining 50?
And sir, remaining is not. Sir, wait, sir.
Any other who can explain the answer? You are not telling the correctly. You are not telling the answer correctly. Any other? Please raise your hand. Those who think that they can explain this point. Okay, Sanjeev, can you explain this point?
No, sir.
Okay, interest on American development bonds. 50% of interest is received in India. So one thing is sure that at least 50% is taxable in India, clear. So this is clear, income received in India. Income received in India. In India. 50% is sure, it is taxable, it does not matter who you are. 46, 46, 46. It's taxable, it does not matter who you are. What about 50%? By default, if it is mentioned that 50% is received in India, it means remaining 50 is received outside India. And these are American development bonds. So of course, accrued in America. So this is the income which is received as well as accrued outside India, as well as remaining 50 is concerned. That is the income which is accrued as well as received outside India. And that is also not deemed to accrue. If you read all the provision of section 9, you will find that this interest on American development bonds is not deemed to accrue or arise in India. This interest income is received from American development bonds, on American development bonds. It is not mentioned from where it is received. So I do not know who is the borrower. American government might be the borrower, so I don't know anything. If you clearly read section 9, you will find that this interest cannot be covered in that interest which is given in section 9, because for that section 9 you must know who is the borrower. The borrower in this case is neither government of India, क्योंकि Indian government के तो bonds है नहीं. The borrower, I don't know then whether the borrower is resident or non-resident, so I cannot apply section 9 also. So what is that? 50% is accrued as well as received outside India. Then it is taxable. So remaining 46 taxable here, exempt here, not taxable here. And for this RNOR also, this is not taxable because this interest is neither from business nor from profession. Point clear or not? Every point has to be given careful thought. Those who have understood this point, they can raise the hands, so that I get an idea that how will you proceed in such questions and have you understood these points or not. 50% income is clearly received in India, so taxable. By default, it means 50% outside India. But just because income is received as well as accrued outside India, I cannot take the decision till I first make sure that income is not deemed to accrue or arise in India. And this interest is covered in deemed to accrue or arise in India, but my interest in this example is not covered because I don't know who the borrower is. So I cannot apply section 9 in this case because of not 100% information given. That is why I will confidently say that this income is accrued as well as received outside India, where it is taxable for ROR, not taxable for NR, and also not taxable for RNOR because this interest income is not from business or profession. So this is my point 1. Any problem you can ask. Otherwise, I'm giving you next point now. Try to tell me the answer of second point, if you can, so that I can correct the reasons which you will give. Second point. Dividend from a German company received in USA. Any answer? Anyone who can try to attempt this point?
Sir, income accrued and received outside India.
Yes, it is received outside India and from a German company, accrued outside India. Then Is it income deemed to accrue or rise in India as per section 9? No, because
No, sir.
section 9 covers dividend only by
Indian
Paid by
company.
Indian company.
yes. So that means it is also income deemed to accrue, or, sorry, it is also income which is received and accrued outside India. So it is also income accrued and received outside India. How much is the amount? 20,000 taxable for ROR. Okay, this is okay. It is also income accrue and receive outside India. Okay, I am writing short from now 20 dash dash because this dividend is not from business and profession. Third point, capital gains on sale of shares of an Indian company received in India, STT note paid. Ignore these three words last, STT note paid, ignore it. Then it is capital gains on sale of shares, capital gains on sale of shares of an Indian company received in India. Any answer? Anyone who can, please raise your hand so that I can see how many of you can can try to attempt this answer. Please raise your hand if anyone can of you have understood this answer. Only 4, only 3. Okay, then Avinash, can you explain what should be the concept which I will apply here? Can you try, Avinash?
Yes, sir. Yes, sir. It is accrued and received in India.
No, I will not say it is accrued as well as received in India. I will only say it is received in India. Okay,
Yes.
because it is clear that it is received in India, because it does not matter where it is actually accrued. So when only one thing is telling me the answer, that income received in India, why will I go into that technicality whether it is accrued in India or not? Point clear?
Yes, sir.
Yes.
Because there are so many incomes which can be covered in any category, which can be covered in even 2 categories. There may be some incomes which are accrued in India, and the same income might be covered in section 9 also, where deemed to be accrued in India. So I will not go into that technicality. I should not go into that technicality. You simply check if your one point is giving you the answer and making it taxable for everyone, that's over. So what you should write is, in this case, income received in India. It is clear. Income received in India. How much?
90,000.
90,000. Taxable for everyone. Fourth point. Anyone who can tell me the answer of point 4?
Sir, actual accrued in India.
I should not use the word actual. I should use the word accrued in India. Okay, you can, when we discuss, we can say actual, but in reality, I should use the word accrued. Point clear or not?
Yes, sir.
If you simply say accrued, by default, it is actually accrued. So I should use now accrued. Profit from business in Mumbai received in USA. Where received does not matter. Business is in Mumbai, accrued in India. So income. Very good. Accrued in India. How much? 64. Taxable. It does not matter who you are. This is how we complete the chapter of residential status. This is what we will apply in real life also if we have learned section 9. Next point. Anyone who can tell me the answer of point number 5? Please raise your hand if point number 5 is clear. I will ask point 5. Please raise your hand those who have understood E point also. Yashika, can you explain? Yashika, can you explain point E?
Yes, sir. Sir, it
Hmm.
is to be accrued in India.
It is?
Accrued in India.
Yes, yes. It is accrued in India because the property is in Mumbai. It's simple. So it is what? Income accrued in India. Then Yashika, can you tell me how much is taxable?
Sir, it is 2 lakh minus 30% of 2 lakh.
Very good. Because from rent till you cover the chapter residential house property, flat give from rent 30% standard deduction. So it will be 140. Taxable for everyone. Then F point. Please raise your hand. Those who can explain the answer of point F. Read point F and then please raise your hand if you think that what you are thinking about point F is correct. Take your time and read point F. Income from profession set up in India, in USA, received there. Neha, can you explain point F?
Yes, sir.
Hmm.
Sir, it is income accrued and received outside India,
Income.
and it is taxable for ROR and as well as RNOR.
No, no, no. Wait, wait, wait. What you are saying is income which is accrued and received outside India. This is what you are saying?
Yes, sir.
Yes. So this is correct. Now after this, what you have checked? Have you checked section 9?
Yes, sir.
Okay. So it is not covered in section 9 also, I think.
Yes, sir.
Okay. Then it is taxable for ROR. It is not taxable for NR. And what about RNOR?
Yes, sir. Taxable है.
Yes, because this is from profession and profession is set up in India. Correct. This F point is what? Income accrued and received outside India. It is income which is accrued as well as received outside India. And it is not covered in deemed to be accrued or rise India category. So I am confidently writing it is income accrued and received outside India. It is taxable for ROR. It is not taxable for NR. It is taxable for our NOR also only and only if it is from business or profession. In this case, yes, it is from profession. Is this business control or profession set up in India? Yes, and that is why it becomes taxable for even RNOR because it is from profession and profession is set up in India. Please raise your hand if point 6 is clear. These all are technical points, but very interesting also. When you learn all these points, then you will find this chapter very, very interesting and very easy also. And you will feel very happy when you start attempting these numericals because it applies theory in real picture. Those who have understood all these 6 points, please raise your hands. Those who have not understood, they have to try and read. This is the only way to attempt or learn taxation. You have to practice. There is no other way. Point number G. Can anyone, those who know point G, please raise your hand. Those who know point G, they can raise the hands. Those who are aware about point G treatment, please raise your hand so that I can check how many of you know point G. It's very easy. Read it. So I will wait. Dividend from PQR Limited Indian Company 10,000. Read it and then raise your hands if you know the answer. I'm not asking basically answer. I'm checking your conceptual clarity. That's it. Answer anyone can tell.
Can I, sir?
No, let me wait. How many of you know this answer? Point G. Raise your hand. Those who know answer of point G. Dividend from PQR Limited and Indian company. Anjana Anmol, can you tell? Anjana Anmol, can you tell? Point G.
Yes, sir. It is
Hmm.
taxable for everyone
Why?
because income is accrued in India.
How do you know it is accrued in India?
Because it is an Indian company.
So what? So what? It does not mean just because the dividend is from an Indian company, I cannot say it is accrued in India. So your reason is not correct. Your answer is correct, but reason is not correct. So I will tell you correct reason now. Nitesh, can you explain?
Yes, sir. Sir, it is covered in section 9, where dividends from uh, dividends paid by Indian companies are applicable to all three categories.
No, no, reason is not correct. You might be giving the correct reason, but concept is not correct. Now say what I should write. It is dividend from PQR Limited Indian company. Just because I receive the dividend from Indian company, I cannot say it is accrued in India. No, I cannot say this. Then I do not know where it is received. Is it received in India or is it received outside India? If it is received in India, I would have written, had it been received in India, I would have written dividend income received in India taxable for everyone. That's it. Since I do not know where it is received, so I can write section 9 also that dividend paid by an Indian company, even if outside India, are deemed to accrue or arise in India. So I should not say that it is accrued in India. I don't know exactly. I should not say that it is received in India because that information is also not given. But what I have told you is that if in any point you are covered where it is taxable for all the category of persons or all the category of different classes of residential status of person, then I should not use that what exactly I should write. So why I'm not writing it is dividend received in India because received is not given. I'm not writing that dividend accrued in India just because it is from Indian company. I'm not using that point that it is accrued in India. But I'm using section 9 here and I will write that dividend from an Indian company, even if paid outside India, is deemed to accrue or arise in India. So any assumption anyone can make in India, outside India, amount received, it becomes taxable. So what I should write logically. So what I'm checking is your conceptual clarity, not the answers only. So dividend paid by an Indian company, even if outside India, even if outside India, is deemed to accrue or arise in India. Accrue or arise in India. So with this, it becomes taxable. 10,000. Please raise your hand if you got the concept. Answers anyone can get. Getting answer is not a big deal. Answer तो कोई भी निकाल सकता है. But are we giving correct reason or not? That matters. Please raise your hand if you have understood all the previous 7 points. Anyone having any problem, please ask. You have to practice these numericals only. Now next point. Next is cash gift received in India from a friend on his birthday. Cash gift received in India from a friend on his birthday. Any answer? Those who are getting the answer, please raise the hands. Let me see how many of you can get the answer of this point. Cash gift received in India from a friend on his birthday. So only four students can explain. Yes, Sanjeev, you explain.
Yes, sir. I think it's actually received in India.
Yes, it's very simple. I will simply write that income received in India. That's it. It's very simple. 2 lakh, 2 lakh, and 13 lakh. Sorry, 2 lakh. Next point. Interest on bank deposits in India. Fixed deposits in India. Please raise your hand. Those who know the answer. Nitesh, can you explain?
Yes, sir. Sir, it is income accrued in India, sir.
Yes, it is income which is accrued in India because bank deposit is in India. It's very simple. Very simple. So reason you must know, income accrued in India, and that reason only those can tell who have read the concept in detail. Amount 13 lakh. So it does not matter who you are. That's it. So it gives you gross total income and that's it. So you can do the total, gross total income. In this question, there is a deduction also under section, for this FD, there is a deduction also under section TTB. But since I have not discussed it, you can skip it. How to apply deductions, that I will tell you later on. Income tax is a subject which cannot be read in isolation. All the chapters are mixed. So that I am not discussing. You do the total and that's it. Okay. Now, in the next class, I will show you the website of tax department for this section 9. Anyhow, so I am ending this session today. You only revise these two numericals and read the points which I have discussed with you today in section 9. Tomorrow also we will practice some more questions of this. Before starting new topic, we will practice some 4 or 5 questions. So that's all and goodbye.
Thank you, sir.